The S&P 500 just shattered the 6,000-point barrier, a milestone that signals a surge of confidence across Wall Street. Investors are back, pushing the index near all-time highs and fueling a broad-based rally. The Dow soared over 400 points and the Nasdaq jumped 1.2%, marking a second straight week of solid gains for all major indexes. This isn't a fluke, it's a sign of real momentum and renewed optimism in corporate America. Recent fears have faded, replaced by a powerful cocktail of positive economic data, strong earnings, and easing political tensions. Analysts point to the market's resilience, with investors now focused on long-term growth rather than short-term noise. The psychological impact of crossing 6,000 is huge. It draws in more retail investors and creates a feedback loop of positivity. FOMO is real, and it's driving even cautious investors to jump in. This is how bull markets sustain themselves. Good news leads to more buying, which pushes prices even higher. The shift in sentiment is clear. Investors are moving from defense to offense, embracing growth and opportunity. The bears? Nowhere to be seen. The S&P 500 at 6,000 is more than a headline, it's a turning point. The market's message, the bull is back, and it's running strong. Investors are betting big on the future. And for now, the momentum is unstoppable. What's behind this surge? It starts with jobs. The May report crushed expectations, adding 139,000 new jobs and keeping unemployment at a low 4.2%. Businesses are hiring, consumers are spending, and the economic foundation is rock solid. President Trump's call for a full percentage point rate cut from the Fed added more fuel, making stocks even more attractive. The combination of a strong labor market and the prospect of cheaper money is irresistible to investors. Worries about tariffs and global instability faded as traders piled into stocks, betting on continued expansion. This isn't just hope, it's data-driven optimism. Investors are putting their money on growth, not just recovery. Tesla's comeback is the story of the day. After a brutal sell-off triggered by a public feud between Elon Musk and President Trump, whispers of a truce sent the stock soaring nearly 4%. The drama showed just how much a company's fate can hinge on its leadership's public moves. With tensions cooling, confidence returned, and Tesla became a catalyst for the entire tech sector. The debate over Tesla's future isn't over. Bears warn of volatility, but bulls see a tech and energy powerhouse. Big firms like Morgan Stanley remain bullish, urging investors to look past the drama and focus on Tesla's innovation in AI, robotics, and energy. Tesla's rebound is about more than one company. It's about sentiment. When Tesla rallies, optimism spreads across the market, especially in tech. The Musk-Trump truce removed a major overhang, letting investors refocus on long-term potential. This shift in focus was key to the broader market's rally. Tesla's turnaround is a lesson in how quickly sentiment and markets can change. It's a reminder leadership and perception matter as much as numbers. Not every stock joined the rally. Lululemon plunged 20% on weak sales guidance, and DocuSign tumbled after cutting its outlook. But tech giants stole the show. Microsoft surged to a record high, overtaking Nvidia as the world's most valuable company. Alphabet, Amazon, and Apple all advanced, powering the S&P 500 and Nasdaq higher. The message in today's market: you must deliver. Miss expectations, and you pay the price. Broadcom learned this the hard way, dropping 5% after a disappointing outlook. Investors are scrutinizing every earnings report. There's no room for error. Yet, innovation is still rewarded. Circle, a digital finance company, soared on its IPO debut, showing there's appetite for new ideas. The market is rewarding strength and punishing weakness. It's a challenging environment, but one that favors execution and innovation. The result? A complex but ultimately optimistic market landscape. The optimism spilled into digital assets. Bitcoin surged past $104,000, echoing the risk-on mood in stocks. Investors rotated out of safe havens like treasuries and gold, chasing higher returns in equities and crypto. Even oil prices climbed, reflecting bets on a strong, growing economy. The day's trading told a clear story. Confidence is back, and investors are embracing risk. The combination of a strong jobs report, the Musk-Trump truce, and hopes for lower rates shifted psychology. Money is moving out of safety and into growth. Investors are betting on continued economic strength and corporate prosperity. For now, that bet is paying off.